Morning, Summer.
In the chat, can everyone just let me know if you're hearing us all good, if you heard me and if you heard Mick just then? Awesome. Thanks, everybody. Hey, Kent. How is everybody today? Did everybody have a good long weekend? Oh, excellent. Good to see. Julie ate too many chocolates. I think everybody did. Rob's asking, does anyone know where he can buy flour? You're in around Browns Plains area, is that right? Does anyone know where to get flour around that area? While we wait for some responses, we might get started. So good morning, everybody. Again, thank you for joining us for the webinar. As always, we are recording the session, so if you do have to skip out or anything like that, then you will get sent a recording following the webinar, so you'll get to rewatch it all if you need to. My name is Summer and I'm one of the Member Services and Communications Coordinators for MPAQ, and today I will be moderating the session. So during today's session, we're going to be speaking specifically about the JobKeeper payments from the federal government. So first up, we'll hear from Kym from our Workplace Relations team, and she's just going to give a quick update about how the JobKeeper payment is affecting the Fair Work Act. And then we'll follow that up with a longer discussion with the team from Xact Accounting, and that'll be about the legislation that was passed last Wednesday and what it means for your business, how you can access the JobKeeper payments, everything like that. Finally, at the end, we'll take some time to do some Q&A, so we'll bring back Kym, we'll bring back all of the Xact Accounting crew, and we'll also bring in Penny, the MPAQ Executive Director, and you'll be able to ask any questions that you've got about anything that we're doing right now and about the JobKeeper payments. If you do want to make type in a question, you can do that in the chat. If you haven't found that already, it's on the right-hand side of the screen there. You can type a message to everybody, or you can just send it to admin, which will just send it to me. So down the bottom, you can choose whether or who you want to send it to. But that's enough from me. I'm going to hand over to Kym first. So Kym, when you're ready.
Thanks, Summer. Good morning, everyone. I'm only going to do a brief update today in relation to some of the changes to the Fair Work Act with the JobKeeper payment. So I am also putting together a question and answer fact sheet for everyone, which should be available tomorrow. For now, I'm just going to turn my webcam off and let's get started. Okay, so the Fair Work Act of 2009, it's been temporarily varied to insert a new Part 6.4C to help employers who qualify for the JobKeeper payment. And it's to deal with the economic impact of COVID-19. So The coronavirus economic response provisions in Part 6.4C of the Fair Work Act temporarily enable employers who qualify for the JobKeeper payment to give an employee a JobKeeper enabling direction. So this legislation will temporarily amend the Fair Work Act to enable employers in certain circumstances to make temporary and partial stand downs, to alter an employee's usual duties and locations of work, to alter an employee's days and times of work, and request that an employee take paid annual leave, including at half pay. So in summary, under the new provisions, where an employer is eligible to receive the JobKeeper payment in relation to an employee, the employer has the scope to stand down the employee, reduce the employee's hours, change the employee's duties, change the employee's work location, and or direct the employee to take annual leave. And I thought I should just bring up to everyone as well. So in relation to apprentices, you can only claim either the apprentice incentive if you have less than 20 employees, or the JobKeeper payment. You can't claim both. So for example, you may have put a claim in for your apprentice already from the 1st of January for the first quarter, which will be under the apprentice incentive. You can then elect to claim JobKeeper for your apprentice moving forward. However, you can't claim both of those payments. And it's during the period for which the employer and employee are eligible for the subsidy. There's a number of procedural requirements that need to be met before you can make these changes, including obligations around notice and consultation. And it's important to note that decisions are subject to review by the Fair Work Commission in the event of a dispute. So the Fair Work Commission's primary role is to deal with disputes about JobKeeper enabling directions or flexibility agreements. They do have a new application form, which is a Form F13A, application for the Commission to deal with JobKeeper disputes during the coronavirus. So it is important that you do follow the directions and you do meet the criteria. And as I mentioned, I will be putting together a question and answer form, so which will be available to all members. Okay, so I'll be available at the end of the webinar today to answer any questions. I'll hand over to Mick now. Thanks, Summer.
Thanks, Kym. Just before you go, sorry, Kym, I might just quickly ask this one question that came through. Donna asked, under the apprentice incentive, can you reduce hours for the apprentice without claiming the JobKeeper payment?
At this stage, Donna, under the Plumbing and Fire Sprinklers Award, an apprentice must be employed full-time under the award. However, as mentioned in a previous webinar, all of the MPA associations are putting together a proposal to vary the Plumbing and Fire Sprinklers Award during COVID-19, which will allow employers to be able to direct employees to work part-time. But at the moment, they must be employed full-time under the Plumbing and Fire Sprinklers Award.
Cool. All right, thanks for that, Kym. Yeah, like Kym said, we'll get her back at the end to answer any other questions. So if you think of anything, just pop those in the chat. So I'm now going to introduce the next speakers. So they're all from Xact Accounting. So Mick, who's the owner and CEO of Xact Accounting, along with Josh and Suzanne, who are both here with us as well. So Xact Accounting have been corporate supporters of MPAQ for a few years now, and we've presented a lot of webinars and workshops together, especially in the last few weeks. As I said earlier, if you've got any questions for any of the guys from Xact, just type those into the chat and we'll come back to them at the end. But for now, I will hand over to Mick and the guys.
Thanks, Summer. Yeah, thanks very much. And thanks everyone for attending our webinar on the JobKeeper payment scheme. This is an incredibly large scheme that the federal government have put together. It's $130 billion, the likes of which we've never seen before. But of course, we've not seen circumstances like this before either. Today, as Summer said, we've got Suzanne, who's one of our client directors, and Joshua as well, and they'll be here helping out with some of the more technical questions. Yeah, we're really proud partners of Master Plumbers, have been for a few years now, done a lot of work with them, and I'm sure, and some of the material they've been putting out recently is just awesome, and I'm sure Kym, who's no doubt still listening in the background there, has been an invaluable support to a lot of members during the last few weeks. So rely on her as you can. This is what happened last Wednesday. All of these acts and rules and bills were passed in Parliament, and I won't bore you with what is in each of them, but that's what they all look like. So the basics, the actual basics of the JobKeeper program, it's actually quite a relatively simple program. It's just the devil's always in the detail, and some of the intricacies and some of the curly questions around this are actually quite difficult. And some of them we don't have answers to yet. The government's been releasing things slowly over the last, since Wednesday really, since they've announced it, they've been releasing things, and they've got a lot more to release yet. And a lot of the power to make decisions have been delegated by the federal government to the ATO commissioner. So he's going to make up some of his own rules, particularly around some of the eligibility requirements. So we'll go over that in a minute. But basically, if you drop 30% or more in revenue, so that's GST revenue, then you're entitled to participate in the JobKeeper program. And if you participate in the JobKeeper program, you're entitled to receive $1,500 per fortnight per employee. And we'll talk about what employees are eligible and so on in a minute. It's paid to the business, the eligible business, not the employee, so that the business owner, i.e. you, get it. As I said, you have to have 30% decrease. There are some wage conditions that must be met. And there's some tricky, it's not really tricky, but there's some administrative stuff around the ATO that you need to make sure that you meet. And we'll explain those today. It's not difficult, but like I say, because it's new and there's a bit of time sensitivity about it, it's important that you get onto it, particularly if you want to participate in the scheme for the April period. So for the period we're now in, you need to make some elections and fill out some forms and so on within a time frame in order to be able to receive those payments. So who's an eligible employee? Well, they must have been on your books at the 1st of March. So it's not somebody, if you've taken the week after, it's no good, or the 2nd, it's no good. They have to have been on your books at the 1st of March. If they've got to be 16 or over, they can be part-time, permanent part-time, or permanent full-time, or they can be a long-term casual. And a long-term casual is they must have been a long-term casual for 12 months as at the 1st of March. The subclass 444 New Zealand residents are also entitled to participate, or you're entitled to include them on this. And the individual must advise the tax office that they comply. And there's a form that's been released in the last 24 hours that you can simply, you have to, both the employer and the employee have to fill out and get signed to cover off on that. So that's fairly easy. The eligible businesses is any entity type. There are other eligible businesses, but we're not going to talk about those such as charities and so on, because obviously it doesn't apply to anyone on the webinar today. But obviously companies, trusts, partnerships, sole traders, and they've got to have carried on business as at 1 March. And the other thing is that the most important thing is they've got to have satisfied the decline in revenue test, which is 30%. And like I say, on the face of that, that's actually quite simple. But when you look at some of the intricacies around that, it can be a bit tricky. So we'll have a look at that. So there's a little 3-step thing that we made. It's not that difficult. You simply, and some of you probably know this already, but if you are a quarterly BAS lodger, then what you simply do is you get your quarterly revenue for this. So you project your quarterly revenue, your June quarter revenue, this current quarter. So 1 April to 30 June, you're going to project that. And then, and we'll come to how you do that in a minute, but you're going to project that. You're going to compare that against the same quarter last year, so the June 2019 quarter. And if there's been a 30% drop or more, then you're entitled to participate in the scheme. So that sounds all very easy until you say, well, how do I project the current quarter's revenue without a crystal ball? Because I don't know about everyone else here, but I'm sure everyone feels the same, that it's actually very, very difficult to figure out what's going to happen next. I mean, things have slowed down a little bit in terms of the rate of change and some of the level of uncertainty, but we still don't know for certain what's going to happen next. And it is very, very difficult to project. And particularly if you're a project plumber, it'd be very difficult because you're not sure if you're going to win that project, etc. And we're not sure if those projects are going to be knocked on the head, and a lot of the private ones are. If you're a maintenance plumber, then things have been going relatively strong for most project maintenance plumbers that I've spoken to. So what's going to happen with that, we can't be 100% sure. So these are the sorts of things that you've got to do. What you've got to do is come up with a reasonable basis in which you calculated your projection and document it. So, you would if you're a project plumber, you'd obviously project your revenue on those projects. You would project it in. You would have a look at the probability of winning other work and what other work you've priced, etc., and then that's your projected revenue for the quarter, and then compare it to the last quarter. So this is just a general comment. It's not specifically in relation to plumbers, but there are things in there that you can look at, such as decreasing customer sales, obviously decreasing the number of customers. So if you look after real estate agents, for example, and for whatever reason a few of them have dropped off during this period, or not using you, or they're using somebody else, or whatever, then you can try and do a calculation based on that. Now, the Treasury has made it clear that for those people that use a reasonable basis upon which they do their projection and they fall short, meaning if they fall by 29, 28, 27 or backwards at that, then there is some leeway for the Commissioner to or the ATO to let that through, and that'd be on the basis of an audit, because this is a self-assessment decline in 30%. In terms of the specifics around that, is it 29%? Is it 25%? What do they do if you're 20%? There's been no information released about that, but we expect that will be released shortly, hopefully within days, as to some guidelines around that. The other, just on that as well, the other really important thing to note is that there's obviously people that are startups, scale-ups. They've got lumpy revenue. They may have had a really bad June quarter last year. They might have been sick. They might have had staff off. They might have lost there could have been something about the June quarter last year, or they may not have been trading in June quarter last year because they're a startup. So the Commissioner has been given the discretion to come up with an alternate test, and that establishes eligibility in specific circumstances. So those are things that I've just mentioned there. In terms of how that's going to work, we don't know yet. But what we do know is that there are a lot of startups and scale-ups and businesses, for whatever reason, have got unusual circumstances, and so they're going to have to come up with some guidelines around that, where more and more people are eligible, rather than just relying on this basic test. That's obviously only going to cover a certain portion of businesses out there. In terms of the wage conditions, which we mentioned before, it's pretty simple. If you have an employee that's only earning less than $1,500, then you need to top them up to $1,500. They need to be paid at least $1,500. Now, there's some bizarre set of circumstances will come out of this, and we know of one client that has a young school-aged person who's 17 and is a casual, but a long-term casual, and earns about $50 a week to do the gardening of the CEO's house, and he would be technically eligible to receive the $1,500 a fortnight or $750 a week, which is obviously a bizarre outcome, but it is within the guidelines, and you have to top them up. You don't have to pay superannuation on the top up. You can if you wish, but you don't need to. So if they're only earning $200 a week, and they all of a sudden go to $750 a week, you don't need to pay any top up on that on the super. If it's $1,500 or more, then you simply fortnightly, that is, you simply keep the subsidy as an employer. So there's some administrative tests or steps, I should say, between now and the end of April. You've got to check whether or not yourself and your employees meet that eligibility requirements, and particularly, and I can't stress this enough, you need to document how you determined your 30% drop, and you need to document your assumptions and your calculations to prove that if you did fall short and you came in at 25 or 27 or 23 or something, then there was a reasonable basis for which you determined that you were going to drop by 30%. So I think that's really, really important. You document it, and you document all your assumptions as well. You continue to pay at least $1,500 per fortnight for those eligible employees. I think something just came out the other day, or last night, saying that you have until the end of the month to tidy this up because it's the first month. So, for example, you might not be paying some of these people. They might be stood down already or whatever. Don't freak out. Don't panic. You've got to the end of the month to pay them, top them up, and make sure that they've all got their $1,500 per fortnight, and then you'll be reimbursed for that. Now I've heard two dates. One's by the 7th of May. Sorry, and the other one I just saw the other day was by the 15th of May. They have to pay it. And I'm sure Josh and Suze can chime in later on that one. Notify eligible employees that you intend to claim. There's a link on the ATO website, and they have to nominate and return the form by the end of April. They need to sign it. So just check that out as well. And you've got to enrol with the ATO. So people that have gone online and notify their intent to participate, that is simply a mechanism by which the ATO has to keep information coming to you about the scheme. It is not you enrolling. So my understanding is that they'll open the enrolments on the 20th, which is 5 days from now, and you've got a really short window of 6 days in which to advise the tax office for the April month, that is, that you intend to participate in April. So it's really important that you stay onto this admin side of things. Administrative steps. So apply to claim the JobKeeper payment, ensure eligible employees are paid the minimum, identify eligible employees for the relevant period, and notify eligible employees within 7 days, and the ATO will pay the JobKeeper payment after accepting the application and to your nominated bank account. Each month you're going to need to reconfirm with the ATO about your eligible employees have not changed, and the business portal via your registered tax agent or by your registered tax agent as well. Fair work amendments. I won't go through these. These have just been gone through by Kym. Thanks very much, Kym. So I won't go through these again, but the Fair Work Act has been amended. Business participants, and I'm sure there's a lot of people online that are interested to know this, that you as a business participant, if you're not a salary or wage earner, you can still participate in JobKeeper for yourself. If you're a sole trader, you get it's easy. You can have one partner in a partnership. You can have one beneficiary in a family trust, and you can have one shareholder or director of a company. and you must have been active on the 1st of March. There are some administrative steps to that as well. So you can have one. So unfortunately, you're going to get two unless you have both. If it's a husband and wife scenario, if you're both on the payroll, then you're both entitled to the JobKeeper. If you're neither of you on the payroll, then only one of you under these different entity structures is entitled to, unfortunately. But at least they've chipped in one. There's some more information about the business participant, only one, as I said before. You must have had an ABN on the 12th of March, and you must have had assessable income in 2019, or you must have had a GST sale between 1 July 18 and 12 March 2020, and the relevant BAS must have been lodged. There's the timeline. I won't go too deep into that because there's nothing new here that I haven't already told you. It's important that obviously eligible employees the 1st of March, and that this whole thing ends on the 27th of September, which is 6 months. The other issues to consider very quickly, just make sure turnover decrease are correctly classified and alternate testing. The alternate testing is that one we talked about before. The basic test is the quarter-by-quarter comparative or month-on-month comparative if you're lodging your BAS returns monthly, but most of you on this webinar at least will be quarterly. So you've got that quarterly comparative, and if for whatever reason you're a startup, scale-up, you've just bought a business, you're a new business, whatever, then there is an alternate test, and we're waiting on the ATO to give us a bit more information about that. And then I'll just quickly do some case studies. This is Adam's Plumbing, carries on a plumbing business. Employees are going to remain employed. The employee buzz. Then this is a monthly lodger, so this is a large one. So Adam's Plumbing will estimate the turnover for April, May, and for all the months to September. The business compares the expected turnover for the same corresponding months. If it's 30% down, they can meet the eligibility criteria. If a plumbing business employs 50 people in combination of full and part-time, and we can assume that the employees are eligible, the full-time employees receive $3,000 a fortnight and the part-time $1,000. So they've dropped 30%. So how does it meet the wage condition? The JobKeeper payment will be made to the business to make payments to employees of $1,500 a fortnight that remain employed as a minimum. So full-time employees must be paid $1,500 for a fortnight, which is going to be funded by JobKeeper, and the balance, which is $1,500, will be funded by the business. So effectively, the JobKeeper's 50% subsidy. The part-time employees have just got lucky. They get topped up to $1,500 from their $1,000, and you do not need to pay the superannuation guarantee on the $500 top-up. It's optional. So that's it for our presentation. Do we want to get Summer back there? Here she comes. Here comes Suze.
Yeah, here I am. Cool. We do have a lot of questions that have come in, so I might just get rid of this, bring us all up. There we go. Okay, I'll just go back to the start when questions started coming in. So some of these may have been answered throughout the presentation, so I'll try to skip past those ones. And I already asked that one. So Kym, I think this one actually came in just while we were doing your Q&A quickly, from Angus, just asking whether the changes to the Fair Work Act only apply from when you qualify for the JobKeeper. So
that's correct. Yes. So the changes that were the variation to the Fair Work Act will only apply when you're on the JobKeeper, when you're receiving the JobKeeper payments.
And Sonia's asked, so after applying for the JobKeeper, will they be notified by the ATO that they've been successful? Or will they just receive the payments? Does anyone know?
So can you answer that question again, please, Summer?
Yep. So Sonia asked, after applying for the JobKeeper, will they be notified by the ATO if they've been successful, or will it just be that they start receiving the payments? Or
So this is a self-assessment type system. So once you say that you're eligible and you've submitted your application to the ATO, you are automatically in the system and you'll start receiving your payments once you've lodged your STP to show that you've met the minimum requirements of payments to your employees.
yeah.
So they may send you something, Sonia. I think that's Sonia Hughes. Hello, Sonia. They may send you something, but as Suze points out, this is self-assessment. If you say you're eligible, you're eligible until.
We'll send probably a confirmation email once you've submitted it saying, yes, we've got it. But that's about it. I expect it'll just come through.
Cool. Donna's got a couple of questions. So I'm not sure if you might have answered this one, but she said, say, for example, 1 month you have a lot of dearer materials, i.e. hot water heaters that make your turnover higher than usual. However, this would not really affect your income. It is not a fair representation. Can you talk through that at all?
So I'm assuming what that question relates to, and jump in, Joshua or Suze, if I'm wrong here. I'm assuming that means that if in this current month they're doing a lot of work that has high cost materials, then that's not a true representation, and therefore they may not drop that 30%. If that's the question, the answer to that is I'm sorry, but they don't distinguish between the mix of work or anything like that. It is purely your GST revenue for that period under test. Unfortunately, it doesn't matter what the nature of that revenue is or the mix of work. There is an alternate test though, based that is coming out, that is going to deal with things like lumpy revenue, startups, scale-ups, etc. And who knows? There may be some scope within that, but I would suspect you would need something a little bit more dramatic. I don't know if that's the right word, to be able to prove eligibility than just a change in mix of work, unfortunately.
And she did just make one other comment about, so you spoke about this, but their first year apprentice will be earning more than each partner in the business at this stage with the top up that they get.
Unfortunately, an unusual quirk of the system.
Yeah.
Yes, a lot of first and second year apprentices will be earning more under the JobKeeper than what they normally earn. So the full 1,500 needs to be passed on every fortnight.
Alice has asked whether you guys know what the penalties will be if your projection is incorrect. So if you forecast more than a 30% drop, but in actuality it doesn't happen, but you've claimed the JobKeeper incentive, do you know if there'll be any penalties?
Alison, they haven't released the guidelines yet, but they have indicated that if you do not hit the full 30 and you used a reasonable basis upon which you made your projection, that there's some leeway for the ATO to almost, from what I can see at least, just wave it through. Now, they will issue some guidelines. I'm sure if you projected 30 and came in at 5% drop, they may be putting their hand out and asking for you to give it back. So you want to be a little bit careful there. But I think if you miss it by a few percent, it's not going to matter too much. But I would wait and see what the guidelines come out and say.
And then she also asked another question. Do you know whether this will be means tested later to keep businesses accountable who should not have claimed but did?
No, it'll be audited potentially. So there'll be a number that they'll look at. Well, I don't think potentially. I think it will definitely be, there'll be audits run to see, and it's easy for them to audit, right? Because they've got the BAS return. They're going to compare BAS returns as a starting point. So that'll be the audit process, I suspect, but it won't be means tested. So if you made a heap of profit and still got the JobKeeper, I think, which is the question being asked, I don't think that matters.
Gail has asked, so they've got an employee who is on self-isolation, so they are on leave without pay because they have no annual leave left, do you know if they would be entitled to get the payment?
Just looking at the information that's available at the moment, yes, they would be. What do you think with that, Mick? I'm just looking through different scenarios, and my understanding would be that they would be entitled to that.
Josh, your thoughts, mate?
Yeah, my thought, the key thing would come back to whether you could say that employee is still actively employed, he's actually still employed by the business. If that's the case, then yeah, the guidance is yes, the JobKeeper is available.
Yes. Yeah.
And Anna's just asked for a clarification. I'm not sure if maybe there was just somebody just misspoke earlier, but she just said, can you please clarify for full-time staff, was it 1 March 2019 they have to be on the books or 2020?
2020.
2020, yes.
I got one there from Joseph Egan Summer. He says if you're 30% down in the first 3 months and then return to regular, do you get the JobKeeper payment for 3 months or do you continue to get it for 6 months? I think that's a good one for Suze to answer.
So at this stage, what we understand in the guidelines that have been released suggests that once you qualify for JobKeeper, whether that's now or whether that's next month, you do not need to re-qualify again or regularly to continue receiving it. So once you qualify, it means you're in for the full 6 months.
Trish has asked, if an apprentice is on stand down and you pay them the $1,500 per fortnight, do you have to pay them the top up if they would usually earn more than $1,500 per fortnight?
No.
No, I'll look into that one, but I don't believe so because they're already on stand down.
I think the answer is no to that one, Kym. Yeah.
Okay.
If they're on stand down, they're on stand down. You just got to pay them the minimum, which is $1,500.
So Brian asked, what happens if you might have already answered this actually, but what happens if your income is similar to last year but has dropped off by 30 to 40% now for April and it looks like it will be dropping for the following months?
Happy days. You're entitled to participate in the JobKeeper program. So you're comparing your June quarter last year with your June quarter this year. And if you're going to project a drop of 30% or more, then you're eligible by self-assessment and you might just document it. Like I said before, I can't stress that enough. Document how you come up with that. Because if you fall short and it's maybe 25% or even 20%, there's possibly a fair bit of leeway going to be given, but not if you present a blank sheet of paper on how you did it.
Rachel asked, so you had the link for the people that have employees. Do you know if there is anything like that for that sole traders have to do for the JobKeeper?
I think you're up, Josh.
Yeah, it's, they've released a lot of the commentary on the ATO website around the employees. The ATO is still yet to come back for sole traders on exactly how you go through the process. But the sole traders are in, as we know, for JobKeeper, but the ATO is still yet to release some details on exactly how you administratively.
Cool. Mark has asked about business participants. So if a business participant has a job as well, would they still be entitled to JobKeeper?
So yes, they are still entitled to JobKeeper, but they have to choose only one employer that they're receiving it from. So they can either receive it from the job that they're earning their employment income from or from the business that they're employed by, but they'll have to nominate only one.
Gail's just asked if a director is taking drawings, are they able to claim?
Yes, one director can claim, as long as they meet the other criteria, which of course is the 30% drop. Then one director can claim if they're just taking drawings or dividends.
That director must be active in the business as well. It can't just be a passive director. That's a key thing as well.
I think there's a good differentiation there as well. If you've got two directors and one is employed by the business on wages, and I think Mick might have mentioned this earlier, if they're on wages, they can claim it under the employment side of things. And if you've got another director who is only taking drawings, they can claim it under the business participant side of things.
Yeah, and just to sort of to add on to what Josh just said then, which is that you must be active. I get how that applies to a partnership where you have a silent partner, but if you're a director, I don't know how you can not be active, because then you would be not discharging your director responsibilities. So it'd be very hard for somebody to argue that you're not active. So I think what Suze has just said then, if you've got one, say for example, you've got a husband and wife, and the wife is a director and the husband is working in the business and taking wage, then I'm struggling to see why you couldn't get two JobKeeper payments, one for the husband on wages and one for the wife as a director. But feel free to correct me if I'm wrong there, because this is all pretty fresh, Suze and Josh.
That's fairly much the understanding at this point in time. We haven't got a lot of guidance on how they're going to apply the one person per entity rule where you are a business participant, but for now, that's our understanding and reasoning under the current provisions.
Yeah.
So June has asked, if a business operates on a cash basis, are the calculations done on cash basis?
Well, I think that's it's whatever you're registered for BAS for. So
actually, sorry, Mick, to interrupt, that's incorrect.
Oh.
So they're saying that it's based on GST turnover, which is when you take into account all of your income from a GST perspective. So similarly to how you would report it for GST purposes. But when it comes to working out what your turnover is actually based on the accruals method, not the cash-based method.
Right. I stand corrected.
So Kathy has kind of a similar question to what we had before, but if a full-time employee is on stand down and they've been offered a casual contract because of a lack of work, so they'll be paid less than $750 a week, does that mean they are not eligible to the JobKeeper payment?
I believe they're still eligible because their position with the company has stood down, but I'll take that on notice and look into it for you, Kathy.
I can actually say they are eligible. Sorry, Mick, did you want to answer that one?
No, you go.
So they are eligible, and there is a clause in the rules that says that once you've got one employee in, all employees are in. So you can't pick and choose which employees are eligible and which ones are not. If the employee is still an employee of your business, whether they're on stand down or whether they're working 2 hours a week or 30 hours a week, they are all eligible employees so long as your business qualifies.
Yeah, the only thing I would add to that, though, because we did have this scenario pop up yesterday where somebody stood down permanent employees and wanted to bring them back as casuals. Presumably in that instance, and we were all dealing with this problem yesterday, and because it was a large problem, presumably in that instance to avoid any accruals to sick annual and public. I think there might be an issue in relation to that, in that, and Kym, you can chime in here, but in that you could probably bring them back on the books, but I would have thought you would have had to bring them back in the same capacity, but perhaps on reduced hours. So it might be a permanent full-time capacity, but reduced hours. But that is actually quite a complex, a bit of a tricky question, that one.
It is. We have looked into it. We have been advising members, particularly with their plumbers, that they stand down all of their employees, but when emergency work comes in, they offer that emergency work to their permanent plumbers, but they're just paying them a casual wage to do that work. So they still accrue their annual leave and sick leave as per their normal full-time position. But they're just being paid casually for the emergency work that they're doing.
Is there, and sorry, this is a question from my side, Kym, is there in that situation the possibility that the employee is actually being terminated as a full-time employee and then reinstated as a casual employee?
No, we took advice from Cornwalls in relation to this. So they still have their permanent position, they're just in stand down. However, there may be casual work that does come in during that period that they come in and perform that work and they're paid for that work.
Yeah, okay. Thanks, Kym.
We had a couple of people ask a similar question about where the payment goes. So does it go direct to the business, or is it taken as an adjustment for the BAS ATO account or against the debt that the company owes to the ATO?
Good question. No, it's cash.
Yeah, direct to the business.
Yeah. So there'd be loads of people that have paused paying the ATO at the moment, and so you don't have to worry. It's not going to get set off against that.
Kent has asked, if you complete your projection and you don't think you'll qualify in April, but then the projection changes in May or June, can you register from May or June to receive the payment?
Yep.
Yeah. Yeah. So if you do your projection now, I think Kent. So obviously, and I think I've seen this a bit actually, where we've been talking to a lot of, particularly the maintenance plumbers, and they're doing okay at the moment. Most of them, everyone's gone home and decided to do those odd jobs, etc., or they're doing the odd jobs themselves and breaking stuff. Then you and a lot of them are reporting that they're not seeing those sorts of declines that are going to make them eligible. But that could happen, and it could happen next month. So then you can pop into the scheme next month.
And just to follow up on that, if you do qualify next month, we can't backdate that. So your employees only qualify from the point that you qualify. So the ATO will kick in your payments at that point in time. It's not backdated to March.
So this, obviously there's quite a lot of questions about how it's being calculated for people that are, so Julie, for instance, has said that she's working part-time, working from home. The hours have been reduced, but that still means that she should still be getting the $1,500.
That's correct. Yeah. So the whole $1,500 needs to be passed on to the employee.
Yeah.
So it's a minimum.
Yeah.
You must get the minimum.
Yeah. And Alice had an interesting one. So they have a full-time employee, usually gets paid $2,000 per fortnight, but they've been stood down 1 day a week because of a lack of work. So they now only work 4 days a week. So if the employer applies for the JobKeeper, will the employer have to top up the difference to the full $2,000 per fortnight, or can they still stand down the 1 day on top of that?
Correct. They can still stand down the 1 day on top of that and just pay whatever that those wages calculate in at, subject to the minimum of $1,500 per fortnight.
And Trish had a question about unpaid maternity leave. So they have an office staff member that started unpaid maternity leave after the 1st of March. Would they be eligible?
Okay. So anyone on parental leave as at the 1st of March will receive the JobKeeper payment. However, they're not eligible if they're receiving the parental leave payment from Services Australia. So if they're receiving that, I think it's 18 weeks of the parental leave payment, they're not entitled to receive the JobKeeper. So they can't have both payments.
Correct.
Cool. We'll just do a couple more. So Sarah asked, so their company has grown over the last 12 months. They have 2 more employees on the books this year than this time last year. So how would they project that they've had a loss of income when they're not able to compare apples for apples, i.e. increase in revenue and expenses due to increase in staff?
Yeah. So there's no guidance on this other than the ATO Commissioner. This is called the alternate test, and the ATO Commissioner has been given delegated authority to make up his own rules, basically. And but I suspect because that situation that you're describing is a scale up, I guess you can call it a scale up, where you're growing, and so you not only do you need to drop the growth that you've had for the period, you need to drop 30%. So in some instances, some people are dropping 50, 60, 70% to be eligible, which doesn't make sense. So there will be some guidelines released, but I suspect it'll be something like comparing to the last quarter would be an obvious way that they're going to do it. But until such time as they release the guidelines, we will not know for sure.
Cool. We might just do maybe 2 more. So Nada asked, so they've got a director who's taking drawings, and so they'll be receiving the JobKeeper payment. Will this be treated as wages in the company? And if they're a sole trader that's a startup company and not currently registered for GST, can they still claim the JobKeeper payment?
Who's jumping in?
So to answer the second part of the question first, which was, remind me again, Summer, just skip.
Sorry, that's okay. Yeah, I think there's two questions there. So second part is they're a sole trader, they're a startup company, so they're not currently registered for GST. Can they still claim?
Yes, they can. So it's not based on whether you're registered for GST or not. It's just that you calculate it based on what would ordinarily be considered GST turnover. So don't get confused between the two. But yes, you can claim even though you're not registered for GST.
Yeah, they assume you're GST registered in the legislation. They just assume everyone is in terms of assessing it. Yeah.
And yeah, the first part of the question was, will the director who is taking drawings and receives the JobKeeper payment, will this be treated as wages in the company?
Not necessarily. So the JobKeeper payment doesn't direct whether the amount paid to the director is deductible or not in the company. That's quite clear. They don't sort of direct it. So if it is treated as drawings, then it won't be treated as wage in the company, and the company will get the payment, which we'll have to carefully consider as well, because JobKeeper payment is actually an assessable income item. So the director's drawing may not necessarily be deductible, but the JobKeeper payment for the director would be assessable in the company.
Yeah, I think just to sort of rephrase that, Josh, is our understanding is the company gets the money. What it then subsequently does with it will be it'll be then, they could pay it as a dividend, or they could pay it as a wage, or whatever. It's up to the company then to decide what to do with that money that's paid in respect to a director.
Cool. Yeah, I think we might be coming to the end now. So Sue, Kym, you did talk about this earlier, but she asked about the reducing of the hours for the apprentices. So do you just want to go over that Fair Work Act amendment one more time?
Okay, so at the moment, under the Plumbing and Fire Sprinklers Award, unless your apprentice is school-based or an elite sports person, they must be paid the full 38 hours per week. You can't have them work part-time, but we are working on lodging a variation with the Fair Work Commission in relation to allowing employers and apprentices to agree to part-time hours during this period. However, you could stand them down and they would still be entitled to the JobKeeper allowance. So basically you would be paying them $1,500 a fortnight to stay at home because they're stood down.
And last question, David just asked, do we have more information around the dates of submitting the application? I think you did touch on some of those earlier, Mick. But we might put those in the thank you email.
I think it'll be the 20th, and Josh and Suze are probably a bit more over the detail. 20th to the 25th, is that right?
The 20th for enrolment, but for applying for the JobKeeper itself, that will be available from the 4th of May. This the two steps. So between 20th and 26th, enroll, and then from 4th of May, that's when you can claim the actual payment.
Cool. And Penny, you've been sitting there nice and quietly. We haven't had any questions for you, but did you want to say anything at all?
I know, it was nice for a change to sit back and listen to everybody else. So no, I was just going to say thanks to all of the members for participating in the webinar. And we're going to be sending out a survey today to members, just asking a few more additional questions so we can have a better understanding of some of the impacts that you are facing at the moment and how we can advocate and lobby better for the needs of our members. So if you could please take the time to fill in that survey, it would be appreciated. And yeah, thank you to Kym and to Summer for all your work, and also the team, Suzanne, Josh, and Mick from Xact Accounting as well.
No problem. Thanks very much, everyone.
So while I might just restart this, get rid of all of us. I'll just go over a couple of other things just while we wait and see if anybody else has any last minute questions. But just a little bit of a reminder about the Facebook group that we've got set up, where we're putting a lot of updates and discussions and things like that in it. At the moment, it's mostly about COVID-19, but in the future, it'll be more general. But you can find that on Facebook, and it's only open to members. There is also the COVID-19 awareness training course that we're running, so that's free for MPAQ members, and you can find, and your staff as well, sorry. So that's, you get a certificate, and you can get a logo afterwards just saying that your staff are all trained in the COVID-19 awareness training. Yeah, it doesn't look like any other questions have come through, so we might wrap things up. So as Penny said, thank you, Kym. Thank you, Mick, Josh, Suzanne from Xact Accounting. Thanks for joining us today and for presenting. Thank you to everyone that's come along to watch, and we'll send out a thank you email afterwards with any other follow-up stuff that we've got. So just keep an eye out for that. And yeah, that's it from us today. So I hope you all have a good day.
Thanks, everyone.
Thanks, everyone.
Thank you.
Bye.